Well, for a more detailed look at today's session, let's bring in my next guest, Chris Conway from the Australian Stock Report. He joins me live now from Melbourne. Chris, great to have you with us in terms of what we are looking to in the session so far, with just under 2 hours left to go. We've got the Australian Mining Index jumping the most in over 2 weeks. This, of course, off the back of that surge that we've seen in BHP.
Indeed, Natalie, BHP has really led the charge today, up circa 3% at one stage. I'm not quite sure where it sits now, probably a little bit under that. But it has been a nice recovery. It had sold off in the sort of weeks leading up to today, from about 32 back into 29. And there was a bit of support down there technically. So, look, it's a stock we've been buying. We actually lucked out a little bit and bought some yesterday. But we bought it because we continue to like the commodity story. We like oil. There's still good demand globally for quality iron ore and metallurgical coal. And they also have the potential to spin off and sell those shale oil assets to the tune of about $6 billion. So if they were able to do that, probably release some shareholder value and shore up their balance sheet.
Of course. Now, when we think about what we're seeing in the session so far in terms of volatility, this is very, very much still present. We are continuing to see investors really seeming to bounce around different playbooks in terms of particularly what these Trump trade tariffs could mean, particularly when they do eventually come into effect and fruition, well, if and when.
Yeah, indeed. Look, obviously still yet to see a bill, let alone have it pass either of the houses of US Congress. So still some water to go under the bridge. And the question begs, is it rhetoric from Trump, or is it, you know, the start of a trade conversation with some of the trading partners, you know, renegotiating things like NAFTA? So we're still yet to see, you know, just what this really looks like on the ground. It's an idea more at the moment. But in terms of what's happening a little bit more broadly, this is just the latest element in terms of, you know, there's a lot of friction out there, I think, at the moment. It's that friction that's creating the volatility, as you say, Natalie. So on one hand, you know, locally we've had a pretty strong reporting season. We've got global growth, synchronised global growth, so that's on the positive side. But then on the negative side, we've got these macro issues like, you know, Trump's potential trade war, you know, tariffs, the Italy election over the weekend that ended up going nowhere. So, yeah, it's creating friction at the moment. I totally agree with you. I think traders and investors, and indeed my clients, don't quite know what to do, and that's played out, you know, in terms of some of the price action we've seen lately. So we had a 5-session winning streak followed by a 4-session losing streak, and now today we're having an 80-point gain. So if you can pick a direction in there, you're doing better than I am.
So what's the way to move on this then? I mean, are we looking at investors perhaps holding slightly more neutral portfolios, or what is the way to position in light of this?
Yeah, so I'll speak from the perspective of a short-term, medium-term trader, Natalie. That's the product that I look after for Australian Stock Report, is the trading division. So that's exactly what we're doing. We're running more neutral at the moment, so we've got a balance of, you know, long positions and short positions if we can find them. And really waiting for market direction to take over. You know, as I said, we've been through this sort of whipsaw period, and it all started with that big 1,000-point sell-off on the Dow and the tantrum about rising US interest rates and you know, them being expected to be faster than previously thought. So yeah, we're just grinding through this period of volatility. Like I said, friction creates volatility. That's what we've got at the moment. So we're just telling our clients to sort of sit pat for the moment and you know, be patient. Opportunities will come.
Okay, so let's take a deep dive then in terms of what you are currently holding at the moment and your positioning on certain stocks. BHP, in fact, rising off the back of a report that Mexico's Pemex is seeking a joint venture partner. We've seen a surge in BHP shares today, and that's certainly helping the broader index. And this is something, in fact, that you added to your coverage just yesterday, Chris. Yeah,
as I said earlier, we sort of lucked out a little bit, but you know, the reasons for buying it were because it was down at you know, a technical price level down around $29. Yeah, sorry. Obviously the sub 30, and when it gets sub 30, or when it's been sub 30 recently, tends to receive some buying pressure. But again, as I was saying before, you know, there's still strong demand out there for quality iron ore. You know, we know about the widening gap between quality iron ore and, you know, some of the lesser iron ore, but there's still strong demand for quality iron ore. Metallurgical coal remains in strong demand as well. So a lot of assets that BHP, a lot of commodities that BHP produces are still in very strong demand, and of course, you know, oil as well. And oil had a big bounce overnight. So look, we like the commodity stories. I think BHP is one of the best ways to play it. and we provided a technical opportunity yesterday to jump in, and as I said, we lucked out a little bit because there's that Pemex news today, as you said so.
Also holding McMahon, but short Domino's Pizza.
Yeah, short Domino's Pizza. Look, they've got a lot of work to do, basically from right now, probably from actually about a month ago, in the back half of this financial year. They've got to hit a run rate or a sales growth rate of about 11% in their Australia and New Zealand stores if they want to hit their 20% profit target. In the first half, it was only about 3.7%. So they've got to triple that in 5 months. In an industry, I wouldn't have thought pizza's overly seasonal. You know, I think you're probably more as likely to get pizza in summer as you would in winter in Australia and New Zealand. So yeah, they've got a lot of work to do to make up that number. I just don't think they get there. It has sold off pretty aggressively. It was sort of 50s into 40s, but we still think there's a bit more downside on offer.
Well, certainly in terms of where we're seeing the ASX 200 track today, financials on track for their best session in 1 month's time. So certainly we are continuing to see moves to the upside for the broader index. Chris Conway, we will leave it there from the Australian Stock Report live in Melbourne. Thank you.
Thanks, Natalie. Cheers.